This video is going to be very short and valuable, and if you stay to the end, you will learn how you're going to avoid many mistakes that you have been making if you trade from order blocks. So this video is going to teach you exactly how to spot the right order block, what makes an order block valid, what makes it invalid, the ones you should be trading from and the ones you should be avoiding, especially in this new year if you actually want to hit profitability this year. Welcome to my channel. If this is your first time, welcome. If this is not your first time, welcome back. I share everything that's going to help you in your forex trading journey. So if you want to learn exactly what today's topic is all about, stay to the end of this video. Now, a lot of people have come to me and said that, oh, I mark out my order blocks, but each time price comes there, it violates it and then actually goes to my direction. And I tell them, are you sure that your order block is a valid one? Are you sure you're not making yourself the liquidity or the fuel for the actual movement of the market? And they say, oh, I do not know exactly how to spot a valid order block. So if this is you, this video is for you. First on my list, these are the things that you should look out for if you want to actually mark out a valid order block. All right, and it's going to give you a higher win rate. And if you know how to do your risk management properly, then you are just in for a good ride in this year, in your trading journey this year. So first things first on my list, that a valid order block, for you to say a valid order block, first and foremost, do we need to define what an order block is? So for those of you who do not know, if we're in a downtrend, an order block is the last bullish candle before the impulsive sell that broke structure. If we're in an uptrend, it is the last red candle or it is the last bearish candle before the buy impulsive move that actually broke the structure. Once you understand this, you don't even need any more definition. Once you understand this, it is quite easy for you to spot them on your chart. Now, you don't just mark out any candlestick at all anywhere and just say that yes. So if we're in an uptrend, we should be looking out for bullish order block, which is the last sell candle before the impulsive buys. If we are in a downtrend, we should be looking for the last bullish candle, green candle, if that's what you use, green candle before the bearish sell movement, right? So having this at the back of your mind helps you to know where you should be looking for it. All right, it helps you to know exactly where you should be looking for a bullish order block or a bearish order block. Now let's talk about what makes an order block valid or not valid. Number one on my list, that candlestick that you have marked has to influence an obvious break of structure. It must influence an obvious break. You know, there are some charts when you just look at it, you are just so sure that yes, price, you shouldn't be in doubt whether or not that bullish candle or that sell candle, if it actually gave way or if it actually influenced an impulsive move, right? Impulsive moves are not difficult to see. You know, when you see a series of candles that actually goes aggressively to one direction, that is what we refer to as a break of structure, right? An impulsive sell or an impulsive buy. So have it in mind, it must influence an obvious break of structure. You don't need to question it. If you look at a break of structure, it's quite easy. When you see yes, that aggressive movement or that aggressive price delivery from one side of the market to another side of the market, from one swing to another swing, right? So it is quite easy to spot. If it is not easy for you to spot, then it's not it. If it is difficult for you to spot it, if you look at it and it's not obvious to you, then don't force it. It may not just sit on your hands and wait for market to give you obvious break of structures. Two, it must not be mitigated. What I mean by mitigated, price must not have gotten to that place before, right? So after it has created that impulsive move, price should not have gone back there again to do anything. So it is unmitigated when price has not tampered with that price level after it left it aggressively the first time. Okay, so this is where we now want price to actually come back to, right? Thirdly, there must be price inefficiency. I think I already talked about this in the first one. There has to be some form of aggressive movement from that area. Okay, so you have to open your eyes to see it's not like when price is just reluctantly leaving that your zone. Price must actually leave it in a haste. Okay, there has to be inefficiencies, there has to be imbalance from that level. Okay, so this is how you know that yes, that's your zone or that bearish order block. For instance, that's your green candle or that's your buy candle must have gave way to that impulsive or that aggressive move from that zone. Okay, that's when you know that yes, price has some sort of inefficiencies from that zone. That zone influenced some sort of inefficiency. If price is stalling or if price had a hard time going away from that zone, that's giving you all these shadows and all these candlestick wicks from that level, that's not an impulsive move, right? That's not an inefficiency. That's not what we want to see on the chart. So you don't mark that out as a valid break of structure, right? Because price is still there's still some sort of struggle between the buyers and the sellers. But then when it is so obvious, when there's an inefficiency, you know inefficiency is when you see long bullish or bearish candlesticks after that your zone has been formed. Okay, so that is number 1, number 2, and number 3. Then number 4, if we're in a sell trend, that your order block must be found in a premium level. If you don't know anything about premium, discount, and equilibrium levels, I made a video about it. You can click up here and then you get access to that, or you can check in the description box below. I made a detailed video about how to spot premium and discount zones and how you use them, how you use your Fibonacci tool to mark them out on your chart. So back to what we were saying, your order block must be in a premium level or in a discount level. It should be in a premium level if we are in a sell trend. It should be in a discount level if we are in a buy trend. All right, so if we are in a buy trend, I am expecting to have more buys than sell, right? I'm expected to be looking for more buy opportunities than sell opportunities. If I happen to find a bullish order block, in a premium zone, that makes it invalid, even though it gave way to an inefficiency, even though it is unmitigated, even though it ticks other boxes. As long as I find it in a premium level instead of a discount level, then that wouldn't be marked as a valid order block. And then lastly, if you want to go further, you actually find that an order block should have some sort of liquidity around it. It's either there's a sweep of liquidity or there's some kind of inducement or engineered liquidity just before your zone. This is like a fuel. This is like a way that the market movers or the market makers induce traders to sell. Those impatient traders who cannot wait for the market to come into their zone properly, this is like a way the market makers use to induce them into coming into the market. So if you cannot find an engineered liquidity or an inducement close to your order block, it's most likely that that order block that you have marked out will have to become the liquidity. And if you try to trade from that end, you are going to be stopped out. So I believe this video, even though it is short, it has given you some form of value. If it has, smash that like button, subscribe to the YouTube channel, and share this video to as many people as possible. If you have any questions, drop them in the comment section. If you'd like to know more about order blocks and how to use them in the market, click on this video and I'll see you in the next one. Bye bye.